Looking at the calendar is probably the most major part of the morning today, mainly because when you think about the positions that I have in the market, and we'll get to that in a second, we have ADP already behind us, came in better than expected, heading up to advanced GDP, but the truth of the matter is the market's likely going to still be in that same guillotine syndrome that we talked about in the notes. Let's head on over to the notes here from Tuesday, and we talked a lot about the guillotine syndrome because of ADP, FOMC, RBNZ. And I didn't exactly look over the GDP number, but the fact is the market is going to wait on this Fed statement. That's huge. And then, of course, with any of the QE positions that I'd like to put myself into this afternoon, this 3 p.m. release is going to be huge. So I'm thinking we might come back around 2 to put some more realistic levels within the striking distance of, for example, you all know that I would love to get some more QE yen. Just based upon the yen weakness alone, I don't see the QE ever outpacing that yen weakness, at least not this year. So we might come back around 2 p.m. Eastern to recalibrate any of our QE, and I call them wish list numbers, but essentially they're numbers that would represent volatility on the more extreme end. So therefore, under normal pip movement circumstances, I probably wouldn't expect these levels to be reached quickly or maybe at all. But when we have expectation of probably north of 28 pips, even at that moment, leading up into and even at that moment, north of 28 pips, I'll look at the movement per day, and in front of 3 o'clock, I'll see how much of that ground we may have covered. So around 2 o'clock, we'll get back in the room and we'll put some better, more realistic levels on some of those QE positions I'd love to get. So let's start building our notes for today. Of course, today is Wednesday. And I hope you guys have been enjoying the notes. I like doing them. I really do. I really enjoy doing them a lot. So we'll get back to that in a moment. So that's our morning, and then it kind of just simmers down for the rest of the evening. I'm not saying that the Asian session is void of any hot zones, but it simmers down. Plenty of fundamental events the market's going to be just kind of bracing itself for. Dollar yen is going to be another one of the wish lists. So what are some of my wish list pairs that I'm going to be keeping an eye on? As far as that goes, we've got, of course, QE yen. I think dollar yen might be on there. I don't know if the euro pound is going to be a big part of this, but if I get any kind of significant dollar movement, I'd love to get a euro pound trigger. And we had some of these pairs you were watching and listed yesterday. We're going to talk about getting out of the pound yen here today, but I'll show you why I haven't yet. Euro yen, okay, euro yen, that's right. I want to take a look at euro yen as well. So let's add that euro yen to that list for today. So we'll probably look at some wish lists for all this. It's not just the Kiwi. You know, this is for the RBNZ event, obviously, at 3 p.m. And then we have, obviously, the rest of it for the FOMC. And we want to step in about an hour before to start looking at these. So I know by 2:15, by 1:15, by mid-lunch, I really need to be focused on what it is I do or don't want to do. Is everyone clear on that? By then, you really need to have a pretty good idea of what your list is. The rest of it's the FOMC. Okay, so that's the situation there. And then let's jump into our pair, shall we? All right, so what are my open trades right now? And we need to follow up on this as well. So quite frankly, I want my open pairs conversation to precede my wish list pairs conversation. I still have the pound yen. Now remember, the pound yen and the loonie yen were part of just the last third of my position. So last third of my overall position. If you remember, we were looking to see how far can it go. That's the question we ask. How far can it go? And there were some major cycle levels that we were watching. We've already captured profits. We're already in a trailing stop scenario. So now we're just I kind of look at it as squeezing a little bit. Squeezing just a bit. Why? Because I've already realized I've already done my job as a trader. Now, in a trailing environment, and what's the difference? Well, initially, we're in that risk-based, right? So if we take a look at the pound yen here, initially we're in the risk-based environment. Then we go to a break-even. Then we go to a trailing. Now the trailing is typically going to happen around the second profit target. You go to a break-even at the first profit target. So I took a shot at adding to this position at one point. Kept a really tight stop. On the volatility, it stopped me out. So I could have potentially had 2 more lots. So I could have been up 4 lots from 142.20. So that kind of kills me. And I got stopped out of that just by the tune of a handful of pips. I tried that the afternoon. We made the low at 141.87. So I had my stop at 141.90. So that gives you an idea of just how close. So a little bit more leeway. I could have been 2 more lots long. And so that would have been a total of 4 now, not 2. Now I initially started off with what? We had 4 or 6 in this one. And we scaled down since. Anyway, so now here I am up in this area. We've actually gotten up to a high of 144.15. All right, 144.15. That shows me that the 144.20 level is cycle level resistance. And because it failed to even get to the 20 pip, we know that our expectation then is for it to sink back to the 00, which it subsequently did. And then if it broke the 00, head back down to 80. If it can't reach 80, it'll go back to the 00 and on and on. So now I'm just kind of watching this. And now the question is, can we stay above 144? That's really the question now. Can 144 become support? Because then I can build the next stage, look for the next wave of participation. Would I like to see this market go all the way back up to this 144.80? I mean, that's one of the levels I was watching. I think we'd even put in, no, I don't think we put in that target. Hang on, let's take a peek. Here's the pound yen. So we know we don't have to take profit. So I probably want to start thinking about that. I frankly would like to be flat in front of FOMC. I don't, and this is a fallacy of a lot of traders have. I'm coming into the last 2 days of the week. Okay, last 2 days of the week. I am absolutely uninterested in using FOMC as a volatility event that will carry me or take this month to another level of profit. I simply don't need it. I'm not trying to be a braggart. I simply don't need it. I don't need to be exposed to it. Okay? You can already see this thing sinking. And, again, at this point, don't get caught up in the P&L. Just, this is, and for those of you that are curious and have done what I recommended, I would rather you all use your, if you're going to watch your profit, don't do it as currency. Because it's interesting how much this throws you off. Dollars throw you off. These are full-size lots, but I don't have a lot in any one, although I have 5 Euro Aussies. I don't want you getting caught up. In fact, I wish I could make this disappear because that has nothing to do with nothing until it's time to pay myself. And if I look at the pips, the dollars will take care of themselves. So I would like everything to be in points, including this tally here, which unfortunately I don't think I can, which is really a shame, or just remove it altogether. Okay? So actually you have to put in a decimal here, because it's not 2,000, although I'll say 2,000 because I'm just using this as a random way of saying whether I'm up or down. This is actually 202.5, so put the decimal in there. Okay? This isn't 987 or 1,000 pips, it's 100 pips. So put the decimal, it's a 1 decimal place. Okay? So you're just going to put the decimal right in there. So in total, this is up another 2, and you can do the math from here. 141.50, you can see at 143.60, I'm up just over 200 pips. Okay? So put the decimal right in there. So I don't necessarily want you all focused on the dollars. All right? But what I do want you focused on is where there is resistance coming into this market, and where you need to position yourself. And so we sunk from 142.20 through the double zero, now through the 80 pip. Now remember, this is my squeezing position. It's 8:30 in the morning. We haven't even got to our open yet. What do I know about the open? What can I suspect about the open? Down 23 is meaningless. Down 20 in the dollar is likely going to be because of euro strength. We'll examine that as well. Okay? But what I want to make sure that I'm keeping an eye on, two things. One, there's my Dow. Interesting that since ADP, it's been doing nothing but heading lower. Take a look at that. Since ADP, it took a nosedive, a decent ADP, and the Dow takes a nosedive. Interesting. Okay, what's on the flip side of this? There's my dollar. It's heading lower too. It peaked at ADP. Okay? And Tim mentions the bad GDP, and I can see that rolling. But here's what's interesting. Can I blame the GDP? Can I blame the GDP on the Dow's movement lower? Can I blame the GDP on that? The acceleration, yes. The acceleration, yes. The GDP's been out for 5 minutes, and that will account for this candle. But what about all this? What about all that? That's where I say we don't want to just focus on the economic report and not what the market was doing before the economic report. There's a good and this is a pretty good miss. I mean, that's a solid miss, right? So I get the acceleration, but why the disappointment after ADP? So that's where I'm saying that yes, we can look at the bad GDP number and say, oh, of course, but why all this? Why 15 minutes of weakness after ADP? That's kind of interesting to me. So what was the market discounting there? That wasn't a flat number on the ADP. It was a pretty decent number. So I'm already wondering, what's this market kind of thinking? Have we fallen down the rabbit hole when good news becomes bad news? Are we thinking if there is bad news, the Fed's going to be more likely to push to the latter part of 2013? I think we are arguably in a rabbit hole environment. I'm not 100% sure, but for those of you that are uncertain about what I mean by rabbit hole, what I mean by that is this. Think of Alice in Wonderland. That's what I'm talking about here. So what happens is, are we kind of in upside down land where all of a sudden good news becomes bad news and bad news becomes good news? Because with this Alice in Wonderland thinking, if the market thinks that the bad news is going to make the Fed hold off on stopping QE forever, which is not so forever, to later this year, versus solid news, good data, is going to probably give the Fed rationale to stop it, say, closer to mid-year after summer. I don't know that we're there yet, but I think there's a pretty good argument for that. Why else? Look at that 5-minute chart here, gang. Why else would we sell off in a solid ADP and start to come back up after an initial, really unquestionable miss on GDP? I don't know if the Fed is going to be watching this morning's data to formulate the statement that they're going to be releasing in about 6 hours. I highly doubt that. But this is the way the market's going to work. I think we're arguably in a rabbit hole scenario. Bad news is good news is bad news, as it relates to what the Fed's going to do mid-year to late this year. Yes? Does that make sense? So all this is going to basically yank the chain of one of the main currencies that has made our year. I don't want to see this. I say make our year, really make our month, but so far the year, right? One of the things that I continue to cling to is expectation for more yen weakness. I just don't see any reason to back off that. Zero reason to back off that. I have expectation for euro strength, yen weakness, Aussie weakness, which has yet to pan out, and Kiwi strength. The dollar I'm still touchy about, but I'm willing to wander into the dollar yen at some point because I think that the yen will be weaker than the dollar. So even if I'm wrong on the dollar's movement, I don't think I'll be wrong on the yen's movement. But you can see here, this is some yen strength. And that's why you could see the movement on the pound yen. We were watching it. The movement on the pound yen. Moving against me a little bit, briefly, on yen strength. What about the loonie yen? I still have that position open as well. Let's take a peek at that. Okay, so I still have that loonie yen, and we'll get to that euro Aussie here in a moment. So loonie yen pushing up against that 90-95 level. That's where I was curious if this market was willing to go ahead and start testing the waters up there. The real benefit of that break would be, hey, how much above 91 could we get? We started to try to test the waters above 91, ultimately couldn't hold it. The yen strength came in. Okay, this confused Dow movement. By the way, what's moving the yen? What's the driver of the yen psychology right now? Even arguably the loonie psychology. It's a calm doll after all. What's driving that yen? The Dow, of course. The Dow. Right? The Dow is driving the yen. So anyone here who's saying to themselves, I can disconnect the Dow and the yen, don't for a minute think you can abandon those intermarket correlations, intermarket correlations, because the risk environment is going to dictate a lot of what the yen's going to do. So I don't want you thinking that the yen's got its own set of fundamentals and that's that. No, no, no. That might be the larger picture, obviously. BOJ, Abe, all that. But if the risk environment globally, specifically now in the U.S., shifts, you better believe people will flock back to the yen and strengthen it. Why else would we move this way? All this drama in the loonie yen, all this drama in the pound yen was based upon the risk environment here in the States and the economic releases. Euro yen, I'd love to see some more of that kind of drama because that might bring me to a level at which I could get long. We missed our previous opportunity by, was it 2 pips? Yes, I'm still harping on that. How about the dollar yen here? Ooh, close. I don't know if that would have executed an aggro or not, though. I'm uninterested in an aggro. Today I'm completely uninterested in an aggro. So this would have been an 80. Yeah, I would have parked it at 90.80. Even if I parked it at 90.85, gang, I would not have gotten my fill. I want you to realize that. Even if I stepped out in front of the major psych level, which I don't do, but even if I did, with a low of 85, I would not have gotten my fill. Okay? And considering what's coming up today, the Fed, the dollar's going to be in play, and the yen's going to be in play big time at 215. So I'll put in a wish list number here. I'd rather get something below that level, even 90.50 perhaps. But the Kiwi yen, again, another wish list that I'm uninterested in executing now, but I'd like to possibly look for something more significant come 3 o'clock. And you can already see where it's tested the waters all the way down to, wow, 75.50. I'd like something closer to 75.05. You can see where I have my order down here, 74. We may not hit that today, but if something significantly shifts, either by the Fed taking risk off the table and strengthening the yen, and then maybe a 1-2 punch where maybe the RBNZ is not as neutral, maybe a little bit of dovishness comes in, who knows, or some hesitation, boom, we get some yen strength, Kiwi weakness, we could be at 74 by tonight easy. You know, give it some time. Now, that's 190 pips from where we are now. Am I being a little dramatic? I don't have to guess. I can go over to my analysis here, look at my movement per day, and yes, that's probably about 70, 80 pips above what I normally see. So maybe not tonight, maybe by the European session tomorrow. But within the next 36 to 48 hours, to expect 190 pips, if certain things line up and that pair fires on both cylinders, pushing this Kiwi yen to the downside, Kiwi weakness, yen strength, it's not out of the question in the next 48 hours. It's capable. Take a look. It's definitely capable. So this is how I would gauge my expectations. All right. All right, so let's take a look at this Euro yen as we kind of round out the look at the morning. I'm sorry, Euro Aussie. Euro Aussie. Now this Euro Aussie, I will admit, and again, I have a pretty decent sized position here. I have 5 lots in total. I will admit the Euro Aussie was probably a tough one to follow me on. 2 things guided my decisions here. One, we had a 1-hour swing. I mean, the whole thing started with a 1-hour swing trade. When that exhausted, as you can see here, I was looking for an opportunity to then fade it because I had zero interest in being short the Euro Aussie. Because being short the Euro Aussie means I expect Euro weakness and Aussie strength. Even if it's short term, I probably would have been a little bit more tempted had our trade been built on a 15 or a 30. I probably would have been more tempted to take a very nimble short entry. But on a 1 hour, I just really was looking for breadcrumbs and an oversold stochastic to get me long because I really don't want to be short this market. I'm more interested in Euro strength and or Aussie weakness. And even if the Aussie strengthened too, which it has been, I had faith that the Euro would continue to out-strengthen it, outpace it. If this is a foot race ultimately, I had a pretty good sense that we would see a Euro that could outpace the Aussie, which we ultimately have. So I realized, yes, this was a tough one because this was a swing short that turned into a fade for me. We went from a 12 to 2 to a 4 to 6. And remember, the 4 to 6, when we're down near what would be validity, even an area that makes the swing no longer valid, it can oftentimes be where I would consider buying as a fade. Okay, and again, the fade is simply in an environment where we don't have a trend, so we're moving at 2 to 4 o'clock. I might have said 4 to 6 incorrectly. Here's 12 to 2, moving up higher. And this is the swing environment. And then when we start lumpy, bumpy around here, kind of, this is the 2 to 4 o'clock, what I ultimately end up with is an opportunity to take advantage of exhaustion, not only near the top, but also near the bottom of the range. And this range was tough, but I'm trying to identify what the oversold area is by the stochastic, which is down here at the bottom of the chart. So that's all I really wanted to do. Try to take advantage of that. Was it aggro? I think I warned you yesterday. I'm trading aggro here, without a doubt, because I really didn't want to get short. And I really felt that I was on the right side of the trade in terms of the trend. So I had faith in the direction I was taking. I had faith in the individual. We talked a lot about individual stories yesterday. I had faith in the individual currency story. By the way, after going to a 2 to 4, we actually flattened out to a 3. And some of you might have noticed you could have even set up a Momo later on here. Because if you notice, we started to flatten out in here, and then we also went positive on the MACD at the same time. So that could have been a breakout through some sort of trend line. I'm not sure ultimately how much I would have wanted to take that, but whether it be the range you're identifying, or if there was even a trend line, I'm not sure the trend line would have been great, but I think the range would have been, a range breakout would have made more sense. And then you got the breakout here, positive MACD there. So a lot went on here, and I realized it might have been tough to follow me into, but you know what your strategies are. Ask yourself which are most applicable, and whether you want to even be moving against what is not necessarily bullish directional bias, but a whole heck of a lot of momentum. And then you ask yourself, is there any reason for me to be bullish on the Aussie and bearish on the euro, or expect the Aussie to outpace the euro's strength right now? Unless you can justify that, you really don't want to be short for any longer term commitment. So there you go on that trade. So at this point, as we're approaching as you can see here, we're actually trying to push to 3,000. It would probably behoove me at this point. Let's not be piggy here. So I'm going to go ahead and take some of this position off the table right now. So I'm going to close this order right here. So I'm going to close that. So now I'm down to 3 lots. All right. Now remember, in terms of the profit target, I did not have the take profit. Now you notice some of these I do. Here's where I was stopped out. Actually my stop loss, that was a trailing. Here profit targets were hit. So you can see when they were hit versus when I just go ahead and get out manually. All right. So I still have plenty of this position on the table, and I'd like to continue to roll out of this. I'd like to continue to look for opportunities to get out of these positions. Again, I'd like to be flat by the time the Fed rolls around. All right, so this is kind of our pre-Fed current market position. And also, we talked a little bit about our wish list as well. Some of those wish lists, again, I'm going to build. We'll probably build that together when we talk again at 2. So now I'm really kind of talking about squeezing my open positions, and that includes and this includes that Euro Aussie position as well. And let's go ahead and let me give you the notes for today, and we'll move on. Any questions about what I covered?